Hello and welcome to this Forex Preview at xm.com. I'm Maria Pashurthis, and joining me is lead investment analyst Rafi Boyadjian. We'll be discussing the upcoming U.S. inflation data and the potential reaction in the markets. So Rafi, the consumer price index for April is due out on Wednesday, and it will be an important report because it could show that inflation has peaked. What numbers are we expecting?
Well, Maria, the forecasts are predicting that inflation, the annual rate of inflation in the US, will slow down a little bit in April. And there seems to be rising hopes that, we may be seeing the peak, at least in America, when it comes to this inflationary episode. So according to the forecast, CPI should come in at 8.1% versus 8.5% in the prior month. But the thing is, it's not just about, inflation, whether or not inflation is peaking, it's where it's going to go thereafter, how fast it's going to go down towards the Fed's 2% target. And the other thing to remember is that the main reason why we're likely to see a drop in inflation in the coming months is because the base effects kick in from last year. So this time last year, that's when inflation in the US first started surging. So the year-on-year comparison, of course, is going to be flattered. But there are some concerns because, certain costs are still elevated and will likely see further increases. For example, shelter costs, which makes up about a third of the CPI basket, and it also contains rents. Rents in the US are soaring because of a shortage of affordable housing. So more people are forced to rent rather than buy houses because there aren't enough available houses in the US at the moment, and by the time there's enough supply, that could take some time. And there's also persisting supply chain issues. We've got, of course, the lockdowns in China, and they could last for a few more weeks yet, and that's exacerbating the shortages already that have been existed for some time since the start of the pandemic. On the bright side, though, energy prices appear at least to have peaked, and inflation expectations in the US also appear to be leveling off. So there are some encouraging signs, but maybe a bit too early to come to any solid conclusions.
With these signs that inflation is plateauing, what reaction are we likely to see in the dollar and markets in general?
Well, the dollar is at a 20-year high at the moment against a basket of currencies. It has cooled off a little bit. That's because Treasury yields have come down slightly. But if you look at things from the Fed's perspective, consumption in the US remains strong. The labor market is tight. So there's no reason why they should have a rethink about their rate hike path at the moment. In fact, policymakers are signaling that the Fed will probably raise interest rates by 50 basis points, at least in a couple more meetings, possibly more. But should we start to see inflation peak, then at the very least, that's gonna we might see improved risk appetite on the back of that, because that's when we're also going to probably see rate hike expectations peak as well. So even though the Fed will probably continue to raise rates in the coming months, rate hike bets will probably peak around about the same time as inflation does. So although there's still quite a bit of uncertainty about the outlook, once we do get to see some solid signs that we've seen the worst of this inflation surge, then that could be positive for risk sentiment, equities, but not so much for the US dollar.
Rafi, thanks so much. And thanks for joining us at xm.com.